So this is the daily chart on Palantir. It ended the week roughly muted. However, it is off the highs established on June 26th, roughly at $148. Now, many on Wall Street still think that the stock is overvalued and trading at a premium. Part of it is because the average analyst on Wall Street has a $104 target. The most bullish of the analysts is Luke Capital. They have a $155 target. Now, what does Palantir do? For those who don't know, Palantir powers real-time decisions systems for defense, intelligence, and high-stake enterprises. Founded in post 9/11 urgency, the firm runs deep in U.S. federal agencies. However, it is now trying to branch out into commercial sectors. Now, before we get into the charts, let's actually get into this article. So the company posted a 39% year-over-year revenue surge to $884 million. This is their recent earnings, while just the EPS soared 62% to 13 cents. In the U.S. overall, revenue surged 55% annually to $628 million, but the spotlight was the U.S. commercial revenue, which climbed 71% to $255 million. Commercial bookings reached a record $810 million, marking a 183 annual spike. Palantir also lifted its full-year outlook, guiding for the full fiscal year of 2025 revenue between $3.89 or $89 billion and $3.9 billion. Analysts tracking Palantir expects 2025 profits to reach 37 cents per share, and that would be up 362% year over year. All right, so Palantir went public back in 2020, and in the last 3 years, the stock is up over 1,200%. In the last 2 years, the stock is up nearly 800%. Last 52 weeks, 438%, and year to date for 2025, 80%. Now, this is the weekly chart, and price moves in trends roughly 20% of the time. 80% of the time it's just sideways. But when it trends, it does an impulse move, a pullback, then another impulse move higher. And because price is fractal, you can see these moves on lower time frames. This is the daily chart. And as you can see, price nearly nipped its toes in the upper portion of this weekly buy level. And that was established, if we go to the weekly chart, that was established from this rally in price, 2 basic candles, and then the rally out. Price dips its toes once before moving higher to $120. This was the sell-off that we saw, as Wall Street said, price has screamed to the upside too fast. Price pulled back and nearly dipped its toes again in that weekly buy level. Zooming down to the daily chart, I did have this W formation, which is a double bottom pattern. And they can take the form of a lower low. That would be, in this case, you had this liquidity grab before price screamed higher, forming this W pattern. If we want to just kind of mark out the actual price pattern. Again, price is trending. Look at your moving averages. So where should one get long? Well, again, this is the pullback. You have a level near the 120 level. You have a rally, 2 basic candles, and then the rally out. And as you can see, price dipped its toes in the upper portion of that zone before moving higher. The fact that price couldn't even dip its toes in the zone tells you that there are buyers waiting to get long Palantir. So where should one's target be? Well, you want to have your target, first target anyway, at the all-time highs near that $148 level. And so if you get a pullback to $116, takes them off the table at $148, and that would be good for a 28% return. Not bad as your risk to reward ratio would be a staggering 3 to 1. Until next time.